Hey everyone, fantastic meeting you all this morning. My name is Chunda McCain. I'm one of the co-founders of one of the newest initiatives out of the Paxos ecosystem, Paxos Labs. And we're here today to talk a little bit about a few things, but specifically I want at the end of this presentation to get to a resolution around what does it take to build markets that can scale to enterprises around tokenized assets. And before we get ahead of ourselves and jump into any of the details here, I want to first start with the definition of tokenized assets, because I think it's a very broad term. It can cover things such as endogenously created assets in crypto that are special to crypto only, like Bitcoin, but can also extend out to things like tokenized equities. And so when I talk about tokenized assets within this context, I'm primarily talking about tokenized representations of off-chain assets, specifically three core verticals: tokenized T-bills, stablecoins, tokenized equities, as well as other types of tokenized securities, such as private equity funds and things of that nature. But before I jump into any of that, I want to talk a little bit more about ourselves. So you have a little bit of context of understanding why we see the world this way. So Paxos has been around for the greater part of 13 years when it comes to the crypto ecosystem. And really, we see ourselves as the leading digital asset infrastructure provider across the entirety of crypto. And that journey really started with what we call the first step. And this is a first step that expands across all enterprises, which is asking and answering the question, what is the first thing that an enterprise will want to do when they build out crypto capabilities, right? And really you see that distilled into three core use cases, right? One is, hey, I want to buy, hold, or sell digital assets. The second is I want to accept stablecoins, move from fiat to stablecoins. And the third is I want to issue or embed a stablecoin on my platform, right? And so our product suite has reflected that over the course of the years. And so the Paxos product suite focuses on these three verticals. Most people know Paxos within the context of asset issuance, with things like the PayPal's native stablecoin, which was issued by Paxos, I believe, about 3 or 4 years ago. Pax Gold, one of the largest tokenized gold products in the market. And then the global dollar, which is a stablecoin that's embedded into over 130 enterprises as of today. Additionally, crypto brokerage, if you pull out your phone today and you buy Bitcoin on PayPal or Venmo, that's powered by Paxos Rails. If you're a small business and you accept stablecoins on Stripe, that's powered by Paxos Rails. And so we've really spent the time at Paxos focusing on working with the largest enterprises in the world and asking how can we get them to take that first step into crypto, right? And so it's a long time to be looking at the enterprise market and to be kind of sitting there and understanding what it takes for them to really put time, effort, and energy at scale into crypto initiatives. But the thing that we've realized more and more throughout the years, and the reason why Paxos Labs as an initiative exists today as well, is because we realize that enterprises care more about just the first step. And I think a lot of times when we think about things like tokenized assets, it's really just the first step. Technology and a capability is just the first step for an enterprise. And unfortunately, I think when it comes to driving really deep outcomes within enterprises that actually transform business models, transforms the way they can serve their clients, it really isn't enough. And so what we've realized is that what you should be asking is two questions. Not only what is the first thing I want to do, but secondly, what am I going to do with that outcome once it's on the platform? What am I going to do with digital assets once I bring them on my platform? What am I going to do with stable coins once I bring them on my platform? And really that's embedded into another three things. Generate yield on these assets, borrow against these assets and access credit markets, or move these assets around in on-chain environments. And so we've come to the conclusion that when it comes to building out crypto capabilities for the enterprise market, it isn't just enough to start with even this set of capabilities. The most important piece is how do you connect all of these capabilities together to generate solutions that actually drive impacts, right? And so we want work under a core assumption, which is that all financial enterprises will eventually settle on digital asset rails because it's simply cheaper, it's more scalable, and there's more margins to be generated for those who are actually doing the hard work of generating the distribution and capturing that end user. But in tandem, we believe that in order for digital asset rails to succeed, capabilities aren't enough. Instead, we must think about full-scale solutions, right? And we'll do a little thought experiment and walk through what one of these full-scale solutions looks like and how many pieces it requires and what it really takes to do that. And we're going to use tokenized assets as kind of the baseline for that example. But before I go into that, I want to first talk a little bit about tokenized assets specifically. So for tokenized assets to scale, there are three core properties that matter when it comes to the fundamentals around tokenized assets in and of themselves. I think our last speaker was just talking a little bit about tokenized real estate. And I think in that conversation, there were a few things that were brought up that you'll see here on this slide as well, which is the three core pieces are around this concept of, one, how do you on-ramp into these tokenized assets, specifically through interoperability with stablecoins? Two, how do you facilitate robust secondary markets and liquidity around these assets? And then third, how do you enable these assets to be activated, to do something? And really that is focused on, and that's predicated on access to on-chain credit rails, or credit rails holistically, right? And so we'll go into each of these three verticals in a little bit more depth, because I actually really want to spend time to make sure this really resonates. So in the first piece, why is interoperability with stablecoins so important for tokenized assets? Well, in order to have anyone access, and any enterprise or even any on-chain user to access a novel tokenized asset, let's say you're bringing a tokenized equity on-chain, you're bringing a tokenized private credit fund, what is the conduit for anyone to access anything on-chain? It's a stablecoin, right? It's that unit of account that matters first. And so for some tokenized assets, there are limitations to accessing them that are constrained into things like you can only on-ramp onto them with fiat flows. And so you limit the TAM that you can actually capture when it comes to issuance of a tokenized asset if you're not starting with that first building block of interoperability with stablecoins. Secondly, in order to support robust secondary markets, what is the asset everyone's going to be trading into? It's going to be stablecoins. So this acts as the base foundation, and then secondary markets acts as the conduit to enable the exchange of these assets, of these tokenized assets with others, right? In order for an enterprise to integrate a tokenized asset or to use it in any form of solution or use case, you need to be able to trust that you can enter and exit those assets, right? And in traditional markets, with traditional assets like real estate, with commonly illiquid, or as unfortunately we're all seeing now, certain private credit vehicles, which are becoming more and more liquid by the day, it is difficult to spin these up in traditional markets, which means it's not going to be an exception in on-chain markets as well. And so it's really important to internalize the idiosyncrasies of these various different types of tokenized assets when it comes to creating secondary markets and focusing on not only those idiosyncrasies, but how do we enable those idiosyncrasies to be compatible with stablecoins and the on-chain rails that exist in order to enable secondary markets for these assets. And thirdly, on-chain credit rails. When it comes to making assets active, credit is the bedrock for making anything more active than its baseline use case or value. And I put this as the third one because if you notice, it requires and is predicated by the first two capabilities as well. You need to be able to on-ramp with stablecoins. You need to be able to have a robust secondary market to move in and out of these assets in order to access on-chain credit rails. And when you do access on-chain credit rails, we can start answering the question, what do we do after we get access, right? And so let's walk through one of those examples. So I've been driving this point, this entire conversation about we need end-to-end solutions. So let's talk about one. Let's say if you're a consumer interface, or let's say you possess a consumer interface. Let's say we could call it an exchange, right? whether it's a traditional exchange or a brokerage or even a crypto-based exchange. And let's say you want to enable an end-to-end tokenized equity-backed credit solution. So you want to enable users on your platform to be able to purchase tokenized equities first, and then you want them to be able to access credit against those assets. So what does that look like, right? Well, first you need to answer the question, all right, how do your users get access to tokenized equities? Well, first, they're gonna need custody, right? So you're gonna start with wallets, right? You're gonna start with the baseline is you're gonna need a wallet to be able to enable your users to custody that asset. Either you, in the case of potentially a custodial solution, or you're going to have a non-custodial wallets as a service solution that your clients can use, or your users. Secondly, you're going to need liquidity. And I put liquidity here because liquidity is a few different pieces. It's a few of the pieces we talked about before. You're going to need access to a secondary market to trade in and out of those assets, right? In case they need to get liquidated. You're going to need the ability for your users to be able to trade into that asset, right? Utilizing their stablecoins. And you're going to need the ability for you to settle out of that asset into cash, right? And so now we're already stacking together about 3 or 4 capabilities, and we're not even finished yet. And then finally, we need access to credit, right? And credit is a very, very complicated primitive, right? You need people who are willing to underwrite this risk. Either you as an enterprise could do it, you could source it externally. You're going to need a settlement engine in order to be able to facilitate the underlying collateralization of the assets. And then you're also going to need to be able to facilitate liquidations at scale and source the counterparty liquidity for your clients to borrow from. And so when we look at this concept of, okay, let's just bring a use case of tokenized assets to a platform, we end up in this space where building this use case requires the conglomeration of about 7 to 9 independent capabilities that you could probably look in the enterprise market today, in the infrastructure enterprise market today, and find 7 to 9 different companies that offer each one of those solutions. And where I think we need to go and where enterprises need to go, and our core philosophy within the scope of Paxos and Paxos Labs is ideally more and more enterprises can take the position where instead of having to go to 8, 7, 9 vendors to find a solution, instead you can go to 1 or 2 or 3, and you can cover your capabilities on a use case by use case basis, on a solution by solution basis, instead of facilitating on an individualized basis. Because at the end of the day, in order to enable things that actually move the needle for enterprises, it requires all these capabilities to facilitate at scale. And that's it. There's an additional slide on contacting us. So if you ever want to reach out and chat more about these things, you can find us and myself on Twitter through Paxos Labs or my name, and similarly on LinkedIn. Thank you. I'd love to answer some questions from the crowd. Yes.
Thank you. Regarding the actual offering, do you see yourself more as an integrator and aggregator of like existing platform like Aave, Dexes, and so on, or are you building those primitives from scratch?
I think it depends on the vertical. I think there's a lot of places where you can focus on driving value to primitives that exist. I think in other cases, for example, with the idiosyncrasies of certain types of tokenized assets, you may not be able to do things on chain. For example, if the redemption period on a private credit facility is a quarter, maybe an on-chain lending protocol is not the best way to actually construct a liquid credit market around those types of assets. And so you may have to build something bespoke for that.
You talked about supporting secondary markets and also on-chain. Could you explain a bit how you see the DeFi landscape and the DEXs that you guys interact with, how that's changing?
Yeah, I think when it comes to on-chain markets, the thing that I am realizing more and more is that when it comes to more novel tokenized assets outside of the scope of what we've historically been utilizing in crypto. So endogenous digital assets and or stablecoins. Most of the I'd say like dependency on atomicity in platforms like Uniswap or Balancer and other such platforms really starts to break apart when you have assets that you need one scale of access. So, for example, if I'm integrating a tokenized equity solution into an exchange, they're going to need to facilitate trading at tens of millions, hundreds of millions of dollars of scale, potentially in a single order. And a lot of on-chain architecture isn't really built for that. So what we're thinking a lot about is, all right, what are some of the more new age methods of accessing liquidity that are more tailored towards not only these assets, but also the enterprise profiles that we're looking at, right? For example, a lot of enterprises are very comfortable with asynchronous access to liquidity because we're very used to traditional banking rails. And asynchronous access to liquidity at scale and at predictable costs matters a lot more than instant atomicity, right? And so platforms that can kind of internalize those different trade-offs and offer kind of unique solutions that fit and tailor towards that demographic are really what we're looking a lot more at today. Anyone else? Am I at time?
5 minutes left.
Oh, cool. Perfect. Fantastic. Well, appreciate the time, everyone, and looking forward to chatting to any folks after the presentation.